The stock market is not the same as gambling. This is one of the most common questions I get asked when talking to somebody who is new to investing in the stock market. They say, isn't it just gambling? Well, in the next 5 to 6 minutes, that's what I'm going to explain. If you are new here, hi, I'm James. I'm a full-time investor and former investment banker with over 25 years of experience investing. And on this channel, we talk about all things money, obviously, money with James. So let's get into it. Is investing in the stock market just the same as gambling? Well, no. And if you hang around, I'll do my best to explain why I say that so confidently. Of course, both investing and gambling involve risk and uncertain outcomes, but both are fundamentally different in terms of purpose, time horizon, and expected outcome, and a few other things I'll go into. So first, what do I mean by purpose and expected outcome? Well, when you're investing, you're buying ownership in, well, hopefully, productive businesses that over time will generate profits, reinvest in growth, and pay out dividends. Now, historically, broad markets have returned around 7 to 10% per year after inflation. Whereas gambling, you're staking money on what's called a zero-sum game, meaning the house or other players win what you lose, or you win what they lose. So the odds are sort of designed typically to favor the casino or the bookmaker, or at best you might be at 50-50. So in terms of expected return, you're generally expecting a negative return. Now, second, they also differ in terms of skill versus chance. Investing, of course, has randomness, but successful investors can really tilt the odds in their favor. And that's part of the reason for the channel. Through doing research, diversification, other discipline strategies, and earn a positive edge over time. Whereas with gambling, apart from a few skill-based gambling games like maybe poker, most casino games and lotteries are just pure chance. No amount of analysis changes the house's edge or your edge. The odds are the odds. Now, third, your time horizon. As I've mentioned in previous videos, investing is all about time horizon. And investing is typically a long-term endeavor. So volatility, meaning the little ups and downs that you get from current news events like, Iran and Israel at the moment and the various Trump things, they can be smoothed out over years or decades, allowing compounding. Now watch my video on compounding here for more details on what that is, to work in your favor. Whereas gambling is typically exclusively a short-term event. You wager and the outcome is decided quickly, typically within seconds, minutes, or hours. So with no opportunity for time in the market, as I've mentioned many times on this channel. You don't get that chance to improve your odds of a successful outcome. Now, fourth, risk management. This is something which is often overlooked. In investing, you can substantially lower your risk by diversifying across various things. For example, sectors, geographies, asset classes, houses, various types of real estate, stocks, ETFs, bonds, foreign exchange, Bitcoin, cryptocurrencies, whatever you like. There are many, many asset classes which allow you to hedge your exposure or potentially multiply your exposure using other things like derivatives, options, futures, etc. And by adjusting those allocations across all of these various variables, you can adapt investing to suit all sorts of goals and risk tolerances. Whereas gambling, you kind of have very little control over the odds. The cards you are dealt are the cards you are dealt, hypothetically, depending on the game you're playing, obviously. You can size your bet, but diversification or spreading bets doesn't really change the negative expected value. Now, fifth, finally, economic contribution. Now, what does that mean? Well, investing, meaning the capital raised by listing companies on the stock market and allowing various individuals, companies, and pension funds and so on to invest in those companies, provides needed funds for those companies to expand their businesses, create more jobs, create better products, create better services, and that all drives economic growth. which is obviously great for the economy, great for the world, great for most individuals. Now, by contrast, gambling mostly just redistributes existing money among participants. So from the house to the player, from the player to the other player, from the player to back to the house, it's all the same money. It's not really producing anything, and thus with no direct productivity or societal benefit. So what's the bottom line? Treat the stock market as a marketplace for ownership in productive enterprises. Approach it with research, a long-term plan, and risk management. That makes it an investment. Relying on short-term bets without analysis, diversification, or a plan is far more closer to gambling. And what else can you do? Well, you can subscribe to my channel. As I'm ramping up putting out content over the next few months, as I found some more time, so I'll be back on here within a few more with some more content within a few days. And thanks for watching.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.